Ahoy there, trader. It's Phil, and welcome to the Anti-Investor Edge for Wednesday, the 24th. Fun times as always. Asia led the bear charge down overnight yesterday, then bounced 4.1% off the lows, while the US indices barely made any effort to move in either direction. All that drama and the S&P futures are currently sitting kind of flat. You'd think with the peace deal being signed that it may have brought, well, it's still a little bit up in the air, but it's been signed for the moment. Would have brought some calm to the general fuckery that we've been living through, but here we are. Are we seeing something more under the surface now being revealed now that that's kind of out the way for the moment? These are the sort of questions that I'm just kind of want to explore today. So let's set the table and look through the charts. So before we hit the charts, let's just set the mood. The story of the day, as we know, is Asia. It's done all the heavy lifting, the bear charge, then the bounce, while the US has barely twitched. Again, you'd think that now that the main headline from the markets, and again, I'm not disparaging and minimizing what was going on. War is war. It's a bad thing. I get that. But just from the market's point of view, you'd think that now that it's off the table, it's old news, the markets would have kind of settled back into some normalcy, but the markets still seem very, very fragile. So is there something more under the surface that's not yet come to light? Will there be a September or October correction, that old seasonal crash window? Will it be sooner? Will Crocs and socks ever be fashionable? These are the questions that keep me up at night, but none of that really changes the plan, which is to trade the setup in front of me and not the catastrophe in my head. So let's look at the charts. As you might have heard me mention, Asia's done all the heavy lifting. Asia's not on the charts at the moment. It's just the US markets and the usual bits and bobs that we look at. Mixed to flat is where we're at for the moment. We're in that kind of like normal realm of 0.3 to 0.6. We're kind of under that, depending on, well, to be fair, the S&P is flat as a pancake, as you can see there. NASDAQ is attempting a little bit of a charge, but, it's kind of subnormal range of movement in the overnight. The one that I'm loving at the moment is crude oil. That continues to do those overnight moves. I'm thankfully participating in them for a change. So that's all cool and groovy. Taking a look at the S&P, again, the premium poppers, despite the lack of movement yesterday, again, the moves intraday, certainly on the morning, were very clear, very clean. The premium popper setup is my opening range breakout system. We've got nice new software which scores all the entries. We had a standard entry there, break of the range. Price did put in a deep retracement and then essentially just grinded sideways. And this is one of the advantages of using credit spreads instead of trying to trade the same set, say, on futures. When there is a sideways movement, when it's just kind of grinding and meandering sideways, there's still a max profit trade or the target expectation to still be had. Similarly with Uncle Russell, nice quick breakouts. Again, despite the big gaps down, we didn't see any follow through. Again, we can see we've got the opening range breakout. The software's given us a high scoring on the setup, so it's increased position size situation for the day. Nice fast move straight to target. ABC type correction, bull flag, however you want to phrase that. But basically reversing right off the VWAP and just taking out those new highs for another nice setup today on the premium popper setup. So thinking about the swings, the overnight swings, the patience was the right course of action, not jumping in feet first on a knee-jerk reaction. We did see a new bull swing entry, as we can see here, which could take me higher and let me manage that ill-fated bull swing from Monday. And a move below the lows will trip the flip, and then I can start thinking about the bear swing, in which case I'll just have to write off the bull and let it expire. There's just nothing I can do about it at this stage, just with that gap lower. Again, the premium poppers are de-risking it slightly, so again, net, I'm chipping away at the loss from Monday. So again, we'll see what happens, and if we can kind of take the bite out of it, or take the risk off that table, so it's inconsequential. Russell's basically a similar story. It offered nearly an opportunity again. We saw that strong rally and it almost gives an opportunity to manage that for a scratch or reduced loss. Again, I was focused more on the opening range breakout trades. Again, it's partially de-risked. There may still be an opportunity to do something. The overnights, as we just saw, they are pushing a little bit higher. So again, it's not out the realms of reality that Monday's loss can turn into a reasonable profit. So we'll see what we see when we see it. And similarly, I'm looking, to be fair, I'm actually going back to the consolidation that we can see here on the Russell. Just basically waiting for the breakout and not trying to get involved in what is clearly price meandering sideways. So a break through the lows, break through the highs, and we can kind of resume business as usual. Crude oil is paying me. It's doing very nice. Again, we can see price has pushed down through that, what we can now officially call a head and shoulders pattern. It has broke the neckline. Again, we only know this, like what it's called afterwards. Again, I do bang this drum quite regularly until it has completed the pattern. We don't know what it's called, and ultimately it has ran to targets just around that 40. Sorry, around that, I don't know why I said 40, around that $71, $72 level. We're just about there. Height of the pattern added to the breakdown, or the neckline in this case, and that gives us that projection target. So we're just chipping away at that. I've had some targets along the way. I've added into the position for the swing. Percentage R continues to be in that lower 20%, which is indicating a strong trending move to go lower. But despite that, the volatility, if we look over at MACD, the range of movement's not massive. We can see that the MACD V histogram, which is volatility adjusted version of the indicator, is kind of flat. So we're not doing any exponential movements. We're not face ripping sell off essentially. It's just kind of grinding lower and pushing lower, very steadily without getting too excited. Bitcoin is looking, again, very similar to how crude oil was looking. We've got that head and shoulders type pattern. Again, it's a consolidation by the name. It has broke the neckline as it starts to push low. And again, if we do break that 58,500 level that we commented on earlier in the week, then the bull thesis is off the table. We've got to definitely call it a bear move, and we potentially be looking at a move down to the 50,000 level. I'll leave you with a line from the Stoic philosopher Seneca: for nights like the ones that I've just described, he said, we suffer more in our imagination than in reality. My afterthought today was that the whole list of worries that I have, the crash window, is there something under the surface? Is there a correction that may not happen? Are Crocs going to be a thing? Crocs and socks? These are just things that kind of just run through your minds. The reality is that we don't need to worry about them. And this is why I like to have a rule-based trading system in front of me, rather than try and trade and stress over the catastrophe that coulda, shoulda, might happen. At the moment, it's just all in my head, just those ifs, buts, and maybes. The premium poppers won yesterday because the system acted on what was actually there, not what I was trying to predict. Again, just following the data, following the setups. So worry is free and infinite, and a defined risk setup is finite and real. So trade the one that you can measure. Quick fun facts, since I'm fretting about an autumn crash. The patron saint of worry, the October effect. The market's habit of saving its biggest crashes for the autumn, with 1929, 1987, 2008 all obliging, is named after a line from Mark Twain in his 1894, wow, that's a long time ago, isn't it? In his 1894 novel, I don't even know how to pronounce it, Put It in the Head, Wilson. He called the October one of the peculiarly dangerous months to speculate stocks. And then he listed, sorry, I'm laughing already. And then he listed all the other dangerous months to trade as ones that, basically start to list every day of the month as other months that are particularly bad to trade as well. The joke being that for the speculator, the calendar is never really the problem. Again, the issues are all in our heads with the worry that we have. So that's it. Quiet one on the surface, a busy one underneath. The system's done all the heavy lifting while I pretty much sit on my hands and just push the buttons. It's plain selling on crude, patience on the swings, and a watchful eye on that hurdle in Bitcoin that I'm just basically waiting for price to push lower. So with that said, I'll call it that end scene fades back, roll the credits. Have a great day. I'll see you on the next installment. Bye for now.